Welcome to Inside the Bot, the podcast that brings you to the forefront of business automation. Brought to you by OpenBots, the game changer in the world of intelligent automation. Ever wondered how to streamline document processing from months to seconds? Or how to skip those pesky bot licenses? You're in the right place.
I think your background is very interesting because you're an attorney, you have experience in banking and insurance. So tell us about, give folks, because we talk with C-suite executives, so give folks a little bit about your background and kind of how you got started with bankers compliance.
Well, it's kind of, how your career plinkos through different opportunities and you kind of end up where you don't exactly expect. If you would have told me when I was in law school that I would be working for financial institutions and that I'd actually like it, I probably would have laughed at you. I mean, I started off as a, street level prosecutor in Omaha, Nebraska, doing criminal law, trials, that kind of thing. Then I took a job with the Attorney General's office. And it was my job to defend agency action. So in other words, if the government does something awful to either you or your company, odds are it was through some regulatory scheme. And I was the attorney that defended on appeal whatever they had done to you. So you went through some regulatory process, maybe it was an ALJ or maybe it was some other type of process, but you had a right to an appeal to the court system. And that's where I would come in. It was kind of an intro into a regulatory law type of capacity. Then the global financial crisis happened. I was for a time, I was in-house counsel with a title insurance company, the largest one in the nation. Then I took a job in-house counsel with a kind of a regional bank, about a $10 billion in assets financial institution in the Midwest. And really, it was they had purchased a failed institution that failed in the global financial crisis. They had a lot of problems. It was a big bite for them. So when they took on this other institution, they bought it after it failed. And then they realized once they got into it that it was the largest event of white collar crime in Nebraska state history. So it was one of those things where, the way the FDIC handles these things a little bit is once your bid is successful, they throw the keys at you and say, congratulations, lots of luck. This is your problem now. And so they realized they need an attorney full time just to deal with that mess. So that's how I got into banking. It was kind of one of those, fell backwards into it, and turns out I really liked it. Then I started, after working through that, kind of your standard in-house counsel type of role. Then we lost our chief compliance officer. They hired somebody new to replace them that didn't really have a lot of compliance responsibilities. So you get one of those calls from your boss, where they say, I've got an opportunity for you. And really that's like code for I have more work.
Tons of more responsibilities for you that you might not be getting extra paid for.
Anymore, but they set me up to do all the training with him. And I sat with the compliance department to be just kind of an extra resource just as he's getting his feet wet. And turned out I really liked the compliance role because it called back to when I was defending agency action. It was like the other side of the table, so to speak. So after Great Western Bank, I left that financial institution and started working full time in this. It's a consulting role, basically what I do. I go into financial institutions all over the country and help them out predominantly with compliance, but also BSA, AML. It's a unique role because I get to see how financial institutions all over the country, how they operate and how they deal with some of these common problems that are out there and the struggles that they deal with on a day-to-day basis. And it's remarkably similar, but just different enough in every single institution that it keeps it interesting. So that's kind of the short, long version of how I got into doing what I do. So.
And we've talked with AML folks before, and usually there are with a bank or with an institution. So your role is unique because, like you said, you get to go to multiple places. You're not just in one firm. So what are some, because we're going to get into the whole purpose is these unusual situations, but
right.
Out of all of those, because you have such frequency, or not just with one organization, are there some common themes that you see as related to compliance, as related to financial challenges with optimization?
Mhm. Really, right now, and predominantly, I work with small and medium financial institutions. So they're not the largest ones in the country that are kind of playing with a lot of the new operational automation styles and different things. The smaller banks, a lot of times, they're trying to play catch up. The expectations are set operationally or even from a risk management perspective by some of the larger institutions. And then it's kind of this trickle down effect where, an examiner goes into a large financial institution, sees how they have things automated and it's really slick and things are working well and they're able to generate reports that do things and avoid a lot of that human error that's in any kind of process. And then the medium and smaller financial institutions have to figure out how to match that expectation with different resources and different skill sets. And so a lot of times that's where the struggle is how do you right size based on your risk profile and the limitations that you might have as a smaller institution. How do you meet those expectations? And so it becomes a very unique exercise for these smaller institutions because they all have different risk profiles. They all have different skill sets on their management team and in their financial institution, and figuring out how to make all of that work so that they can, mitigate the risk or alternatively, defend why what they are doing is okay and it's meeting, the whatever the regulatory expectation is. They're actually meeting it. It just doesn't look like the same way that other financial institutions are meeting it.
Well,
So,
does it have to? I mean, if you take a
right.
medium-sized bank,
Mhm.
they have some other advantages that bigger banks don't. Like these bigger
Right.
banks,
Right.
they're usually laggards. They've usually
Hmm.
invested heavily in
Oh,
technology. They're catching up. They have old systems. So, I
right.
mean, I've heard a lot that there's a lot of advantages that these smaller banks, financial institutions have because they can be more agile. They can take more
Right.
risk. They can try different things. So, what's that relationship? Because you're saying that there's a
Mhm.
trickle down effect. They're looking at the big brother banks to show them the way, but these banks don't have it figured out either. They just have
Right.
bigger budgets and bigger customer sets.
Well, and it's tougher to change course. Like you
Yeah.
said, there you can be a little more nimble with it, and any downstream impact, it's more mitigated because you have a smaller, you know, operational flow, and you have smaller customer base where the impacts are going to be a little different than when it's a large behemoth that you're trying to reroute. And so, yeah, I think you're right. There is kind of that play, and really, what it comes down to is being, understanding your risk and being able to justify what you're doing. When I do trainings with financial institution, I tell them that my tip of the day is always update your risk assessment. Go through, evaluate these risks that are in your lap, because it's your sword and your shield. It's how you attack problems. Okay, we have this issue. Let's evaluate it, update our risk assessment. That way we can effectively communicate with management and tell them, look, we're higher risk because of this, that, or the other thing, and we need some modifications, and here's why. But it's also your shield, where if an examiner comes in and says, why don't you have X, Y, or Z? And you can tell them, well, no, we've already assessed that risk. And based on our risk profile, which, by the way, we know far better than you do, because this is our financial institution, we've determined that that's not a priority. And we have these other things that we're working on. And it's great if you want to give input, but we've already assessed that risk. And so that's, using your risk assessment to really kind of direct where your efforts should be spent. That's how a lot of these successful companies kind of thread the needle, so to speak, where it's there's all these expectations. They're coming down, from top down. You have customer expectations, you have industry changes, and how do you keep everything right sized as that's all changing around you? And usually that's the first step, is making sure you understand what's going on in your own financial institution. So
Well, the point there, I mean, if you could narrow the focus, so what are the top risks then that these small to mid-sized fintech companies that they're facing? Are they all different because each organization is unique, or is there something that is synonymous with all of them?
yeah, well, and when you mentioned fintechs, and the problem with the whole fintech industry is that it's such a broad term that it really could mean anything. And I work
What
with
is it to you? Yeah, can you define
yeah,
it in your
exactly.
word?
What
Yeah.
what exactly are you doing? Are you servicing financial institutions? Are you trying to kind of be a quasi financial institution yourself? And there's a lot of different areas that they have kind of expanded into. And some of them started off one thing and became another thing, and it's, they're kind of moving on the fly. So that relationship that they have with the, kind of your traditional brick and mortar banks, that changes on on an institution to institution basis. And so, they all have their own issues that they need to work with. And sometimes it's just as simple as understanding the industry you're trying to step into. With the fintech companies, kind of one of the major issues that I've seen is that you have a lot of tech people, but they understand their field very, very well. But when they try to move into a heavily regulated environment like the financial industry, they get blindsided by things that, because you only know what you know. and this things like fair lending risk or, BSA, AML, where they speak the language of their industry very well, and they've come up with some brilliant solutions. But then they get blindsided by this thing, a marketing platform that you didn't even think through all of the potential fair lending risks that might come along with it. Or you set up a payment processing system and it works really well and it's slick, and that from the customer perspective, it's excellent. But then there's these BSA, AML, monitoring and suspicious activity reporting requirements that come along with that. And a lot of times they step in and they kind of overextend themselves, and then they have to back up and suddenly, oh wait, we need to train everybody on fair lending concepts or UDAP or some of these regulations out there that just hit a little different in the banking industry than they do in other industries. And so navigating that is a struggle, because you have these great idea people, but they're coming into a new environment and they just need to be wary of some of those things that are a little different than maybe other industries you might have worked in the past, if that makes sense.
Yeah. Well, to me, that it sounds like it's one thing to have a great idea and that the technology is there, but then when you apply it, there's these things that maybe they can get slapped on the wrist for trying to innovate for their customers. But how do they stay on top, besides working with someone like you, how do they stay on top of these things? Because it probably is not the greatest to experience it on the other side, and then you get some kind of fines and some kind of bad thing, and then you're into legal trouble.
Oh, and I've worked with fintech companies that had the CFPB come and knock on their door and say, "We think we regulate you," and they say, "I don't think you do." And when the CFPB says, "I think we regulate you," they mean it, and it's tough to get out of. And so then you have a bad couple of months. But really, to avoid that, it's making sure when you are in talking to your customers as a fintech company, let's say you're servicing the financial industry. Making sure you have the right people in the room when you're discussing what you're going to be doing. A lot of times it's you have your salesperson who's really good at selling your product, and they can highlight all of the benefits and everything, and that's great and it's necessary. But also making sure that that salesperson knows what they're doing and the potential risks out there and can navigate it well, or giving them the right resource. Maybe somebody from your team who can kind of help issue spot, because these environments, it's so new, there isn't always if you follow the third party risk management step by step, with the way things are shifting and changing right now, there are new things that aren't covered by this. I mean, the OCC just this week released a statement about AI risk and how it's facing the industry. And while they did talk about a lot of things, ultimately they came back and said, well, we have this existing framework and guidance out here that you should use. But AI is an entirely different animal. And the existing framework for managing third parties and technology and automation, while it's a great start, there are other things that you need to make sure that you're discussing and you're thinking through. And so you want to have your team situated right to set you up for success, but then you also want to make sure that on the financial industry, on the bank side, that they have the right people in the room, because again, we're starting to get layered levels of expertise. Things start to get siloed, and you don't want to start a plan and then have the person who can spot the risk come into the room, maybe too late, and so you have to back things out or you have to redesign things on the fly. And so, starting early and making sure that you got everybody in the room who can really give you the right kind of information, so you can approach it in a way that that's going to work best for everybody. And usually that's where I see the error sometimes occurs. We just got things going, everything was working great, and then we found out about some of these other concerns that slow things down, make things harder than they have to be, or worst case scenario, we have an examiner comes in and tells us we have a problem that we didn't detect. So.
And then it's kind of too late, right?
Yeah, exactly. Yeah.
You mentioned something about the AI piece of it too. So if these companies are still struggling to understand all of the ramifications of trying to adopt technology, I mean, AI is still, I mean, it's the next gray area.
Oh yeah. Yeah.
So I mean, the way you make it sound is that right now it's an idea out there for these companies. From the companies that you've worked with, you can approximations are some of them using AI currently, or are they mainly talking about it and about the possible ramifications of using it?
Yeah, I think you have it kind of depends on the various financial institutions you were in. Some of them are they're on the fence, and they have a little bit of a their risk appetite is a little bit different than everybody, and they are still hesitant to get into things. They've watched some of these other things that have popped up in recent years that have come back to burn certain financial institutions, like the crypto craze, for a lot of years. And then there were some banks that got their hands caught in the cookie jar, so to speak. And so you have those financial institutions that are just kind of sitting back, and they're pretty wary. That's going to be a hard sell. Even though some of those banks are the ones who could really benefit from AI, to be honest with you, but it would help them catch up on a lot of things that maybe they've been, wary about. But then you have the other financial institutions that are they're not only they're excited about it, but they're trying to figure out how to make it work, and some of them are actually already adopting it. I don't want to say that the industry is completely hands off when it comes to it. We see it in things like chat bots, where they're starting to try to implement AI in their consumer response process, or they're starting to use it for some of their marketing purposes. And so I do see that they're starting to try to use it, but I don't know that they're focusing on some of the areas that personally I think would be the most benefit, the most bang for your buck. That I would be excited to see, things like fraud detection, credit scoring, which credit scoring has its own risk. And so that's not something you necessarily want to jump into without knowing what you're doing. But then BSA AML, suspicious activity detection, with any money laundering scheme, the whole point of it is to be as complicated as possible and to mix things up. And I think AI, that is a powerful tool to go in, because at this point, with all of our BSA AML framework in this country, we're catching maybe 1%, or we're even aware of 1% of the illicit funds that are navigating through our systems. And I think AI is one of those ways that depending on the way it could be leveraged, we could really have a revolution in the way that we are tracking illicit funds, and the way that we're actually going through and able to follow the money, so to speak. And that's where
they're using it. The fraudsters are using it already. So
and they're using it already, right?
Yeah.
And even using AI to help combat AI, on that front is
that's what I've heard. It's it's the world where we live in, that you have to. I mean, if fraudsters are using AI, if you're not, then you're just already way behind.
There's no way you can keep up with it, And I work with some very talented and experienced AML professionals, and they know their stuff. But at a certain level, some of this activity is it's so complicated and it moves so fast. By the time you are aware of it, it's already too late, that nobody can really do anything about it. And so that's where personally I'm excited to see how that kind of arena develops with AI. And I'm also encouraged, back in 2020, we had the Anti-Money Laundering Act that it's the biggest legislation to hit the scene since the Patriot Act. And one of the major pushes of that entire, new law is to open up the flow of data, and allow financial institutions and regulators and law enforcement to be able to communicate, because that's part of the problem too. If you're looking at a money laundering scheme where you have a lot of this layering activity, where they're moving funds around in a very complicated manner, particularly if they're using cryptocurrency and they've got some of these automated transaction setup, it's moving so fast. And how can one financial institution even detect some of this activity? And yeah, they can, but it would be so much easier if you were able to leverage some of this new technology. And I think the federal government's aware of this, and they are actively pursuing those types of solutions. So that's where in the next 5 to 10 years, I'm really excited to see where it goes.
Do you think, as a prediction, do you think that these companies, whatever financial institutions, do you think that they're waiting for it to be governmentally mandated? Like, hey, here's how we're doing AI. Here's how you need to do it. Because I mean, they run a risk of doing it incorrectly in the name of trying to be
Right.
innovative.
Mm-hmm.
So is it going to take a push where it's forced on these institutions to do something about it? Because we know that this is on the back end, these fraudsters are using it.
Right.
So is it going to be mandated, or is it going to be these companies that are going to have to take the risk to fail and to pave the way?
Yeah, no, I think that there are a lot of companies out there that are excited about getting into this, and they do want to. I mean, and it's not just about being a good corporate citizen, but I go out and talk to financial institutions all the time, every week, and they are legitimately concerned about money laundering, particularly fraud detection, because they get to see and deal with the people who are victims of fraud. They deal with that, and so they if they can detect that and mitigate it, I think they're excited for that chance. And then on the money laundering side of things, every time you have a money laundering scheme, typically it is tied to some underlying crime. And so they're aware of that. They know, some of the worst actors on the planet are even though what you're seeing may look benign, but it is tied to some just awful things in the world. And so they would like to be able to use their position in the kind of in the economy to combat that. What they're more worried about is getting their hands slapped after the fact. I think that's their concern. I don't necessarily think it's something that they need to be pushed into. I think they see the need for it. They're just more concerned about doing it incorrectly, which
it's ironic. It's ironic too, because
right.
these other guys can do any means necessary to pull a fast one and continue to do that.
Mm-hmm.
So maybe it's maybe it needs to be less regulated when they're trying to innovate for the name of creating more more regulation.
And I think the government, they're aware of that, and they do have some programs where they're trying to kind of open it up to allow for some of this innovation, because I think our industry it has to be the ones that are doing the innovation. I don't think the regulators can really dictate to the industry what's going to work. Now they can help, particularly with smaller institutions that just don't have the capacity to innovate. They're kind of dealing with their own thing with limited resources. But I think opening it up and allowing for this innovation where you don't have to worry about having significant civil money penalties or anything levied against you while you're trying to do good. And but I'm cautiously optimistic that that's exactly what's going on in the wake of this this AML legislation that passed. So again, I'm excited for the innovators out there to come up with stuff, because I know the money launderers are out there. They're innovating every single day. They're 2 steps ahead. So in fact, I've been doing this for years, and still, even now, sometimes I'll come across a money laundering scheme and I'm like, God, that was clever.
So, that's a good one. That's a good one.
Yeah,
right.
Hadn't thought of that one before.
Well, I've got one final question to close us out. So if you, and it's kind of broad, but if you could focus on one thing today that you'd like to change for FinTechs, a particular process, what would that be? How would that look like?
Man, if there's a product in the industry that the financial industry really struggles with, I would say, right now, fraud detection and suspicious activity monitoring, not just with the financial institutions, but with some of these other financial institutions where they're really ramping up the expectations. Things like cryptocurrency, they are now coming under heavy scrutiny, and they need to develop the types of systems that financial institutions have had for decades, and they need to do it on the fly. And that's where I think some of these innovative technologies can help them get up to speed very quickly. Also, things like trust companies, they are suddenly having the spotlight on them, and the expectations are very high, and a lot of them have been behind the curve on what they were supposed to be doing. And so, trying to, from an operational perspective, set up a fraud monitoring and suspicious activity monitoring, and then, oh, by the way, we also are really concerned about your UDAP risk, which is unfair and deceptive acts and practices. So there's all of this framework that now the expectations are starting to be pushed out into other arenas. I think the banking industry is actually well positioned to deal with risk compared to some of these other arenas that I've been kind of sucked into, and I found out that maybe they don't have some of the framework, and that's where I think the fintech they can step in, particularly if they do have banking experts on their team. A lot of time, that's what I see. It's a group who they were inside a financial institution, and they've moved into kind of one of those side arenas, and they're able to bring their expertise, and they're able to partner with some of these tech people who speak a language that none of us can really fully grasp, and they can work together and come up with some of these great solutions for industries that really need them, and they are under the gun right now. And trying to get 30 years of risk management development into a company or an industry that really has never had to do that before. That's where I think there's a lot of opportunity. So,
yeah, I mean, it's a great place to start. It seems like the degree that the companies can take the tech expertise and then also the industry expertise, if they can kind of coalesce that,
right.
that level of sophistication is what's going to breed that innovation. So great points
absolutely. Yeah. And it's great. Anytime you get experts in different fields into a room and start discussing a problem, it's magical things happen. It's great because we're all smart people. We like to think we know a lot about a lot, but you start talking with somebody who's an expert in a different field, and it's like a whole door opens up to things that you don't even understand. And so sometimes those meetings are really kind of fun, because you sit in and you talk to people who know, there's entire fields of knowledge that you didn't even realize were out there. And then pretty soon you're talking about solutions and confabbing. And that's why this fintech arena is so exciting. So cool, and it's so neat. And so I hope they don't get tamped down, because I think that's where a lot of benefit is going to come from those types of activities.
Beautiful. Well, Kevin, thank you so much for sharing your passion, your expertise, and your optimism for what we're going to change here in the future. So it's been a pleasure having you here today.
Yeah, great. Well, thank you. I appreciate the opportunity.